If you've invested your money over the long term, keeping a check on those investments is really important. Hello and Namaste. I'm Manish Ahuja and this is Paycheck to Profit, India's first YouTube channel dedicated to your financial freedom. In the last video, we discussed that putting all your money in your savings account as a retirement plan is not the best idea. Just in case if you haven't seen that video, please check the description of this video where you will find the link to that. In this video, I intend to share with you 5 parameters that you need to check before you make any investment whatsoever. These parameters remain the same irrespective of the size of your investment or the instrument that you're choosing to invest in. Just in case if you're getting confused, what does the word instrument mean? Stocks, mutual funds, real estate, all of these are instruments of investments. So as I was telling you, I'm going to share with you 5 parameters that you need to check before you make any investment decision. These parameters will make sure that all your investment decisions are scientific and ensure that if there is scope of any mistake whatsoever, the loss that could arise out of those investments is absolutely minimal and you will be in control of your investments at all times. The first parameter that you need to make absolutely sure of is the purpose of your investment. All investments may look the same, but they are not. If you're collecting money to buy a car a few years down the line, that's not the same thing as your down payment which you're collecting for your house, which you might intend to buy a couple of years from now. You could also be investing or saving money for, let's say, education of your child, or let's say you're just trying to save for your retirement funds. What happens is you need to be sure about the purpose of every investment that you're making. Once your purpose is set, what you need to do is you need to move to the second aspect of or the second parameter that I want you to be sure of is the time frame. Now this is very logical. If you've decided that you're investing this money for your car, your time frame is going to be about 2 to 3 to 5 years depending on what sort of a car do you have in your mind, how much does it cost, and how much time will you need to collect some more money till you have enough money to go and buy that car. So accordingly, the purpose of your investment directly correlates to the time for which the money will be invested. The third parameter that you need to keep a check on is the risk that you are going to undertake with every investment. If you are going to invest only for about 2 to 3 years for your car or your home, you should not invest in instruments which could be high on the risk capacity. At the same time, let's say if you're investing for the long term for your child's education or your retirement, which is at least 15-20 years down the line, investing in instruments like equities becomes a possibility because all the risks that you would face in 15 to 20 years will mitigate themselves, and anyway we still have other parameters to make sure that these risks that you're undertaking will be minimized with the fourth and the fifth parameter. The fourth parameter that will help you ensure that you mitigate as much risk as possible is the interest or the growth that you have in your mind. Growth is one of the major reasons why you choose to undertake the risk and invest in the first place. So whenever you're investing in any instrument for the purpose that you've already decided, please make sure that you have some idea about what kind of growth or interest return are you expecting out of that investment in times to come. The fifth and the most important factor in a way is constant monitoring of your investment or the exit plan. Now let's say you've decided that you are saving for your retirement, you are investing for the time frame of 15-20 years. The risk that you're taking is that you're investing in equities and the growth that you're getting is good enough. But at the same time, you should keep monitoring these equity investments also, because what happens is every equity market goes through ups and downs. Just in case if you've invested in an equity stock which over a period of time is giving you good returns, but after one point of time starts showing you really major drops, you can exit out of that equity stock for the time being and re-evaluate your position in that stock. Why is this important is because if you've invested your money over the long term, keeping a check on those investments is really important. If you've taken some really good investment decisions, maybe you will never have to exit out of a stock until you reach your goal. 98% of losses in investments are a result of investors losing a track of their exit plans. Please make sure that you be extremely disciplined about monitoring and exiting out of your investments if they get into losses. If you've decided that you will get out of an investment at a 15% loss, please do not negotiate with your mind once you've reached that threshold. I can assure you, if you look at these 5 parameters every time before you make an investment and you keep monitoring your investments, over a period of time you'll realize that investment is not very difficult and the overall approach towards your investments would be very scientific and easy. You will also realize that it is only application of common sense to the money that you have earned after so much hard work. That paycheck has taken a lot of effort. Please make sure that your investments, or rather your bad decisions in investments, don't end up eroding your capital. I hope you found this video to be of some help to you. If you found this video to be helpful, please subscribe to the channel and hit the bell icon. You can also tell me in the comments below what did you like about this video. You could tell me if you can think of any other parameters that I would have missed, which would help you make better investment decisions. I would also request you to share this video with your friends who you think might derive some value and make better investment decisions by watching this video. So that's about it from me for today's video. I'll see you again soon in the next video. Until then, please keep smiling, take care of your loved ones and stay happy. Kaching!